Okay, so round one has been processed last night, and all the teams are now in round two. So let's look at round one results to see what happened. Okay, so we had two standout teams here that made over $60 million in net income. That's a great start. You've maximized your net profits. So this is net profits. And we have a lot of teams. You look at the 40 million mark, we have most teams meeting or surpassing the 40 million mark, which is sort of the baseline of round one. And we have a few teams here underperforming below 40 million. So those teams really need to take some time to reflect upon what their company has done. Think about uh, their competition, what their competition has done to become more successful in maximizing shareholders' wealth. Because remember, companies are in business to maximize shareholders' wealth, not to service the public. These are for profit companies that are doing everything they can to make more profits for their shareholders. Okay, just like the real world. Okay, points per team. So, some point, a couple of teams here. This team scored over 1,000 points, and we have a second team over 1,000 points and a third team over 1,000 points. So we have a few teams that scored very highly in the first round, which is good. Remember, you need over 2,500 points here to get an A, and these points are cumulative. So this team's less than 1,500 points away from getting their A, and they have still 5 more rounds to complete. Most rounds, teams will score between 4 and 500 points. So if think of it this way: if we have 6 rounds and you score 500 points per round, that's 3,000 points. So most teams, as usual, most teams do score very well in year one. Why is that? Well, you're competing against poor management from year zero. So year zero's results were very poor and um, easy to beat. Now in year two, you're going to be competing against your results from last year as well as everybody else in the class. Um, so you compete with other teams in the class to win sales and increase your revenue, but you compete against yourself in your year over year improvement of your ratios and statistics, which I'll go over in a minute. Okay, so we have a range. So even if you earned, as long as you earn somewhere between 400 and 500 points per round, you're doing pretty good. If you earn less than that this round, we have about, I think I'm seeing 3 teams here that did less than 400 points, and that's bad. You really need to do some more practice rounds, do some research, and figure out why is that. Develop a new strategy to improve your gameplay. And remember, I give a lot of hints about the simulation in the course lectures. So if you're watching the textbook lectures that I recorded, there's a lot of hints and a lot of information I give about the simulation in there. Okay, stock price per team. So LG, Moto, Mojo, and Bar B&B Car Company. These have the highest stock price. We know that B&B Car Company had high points and high profits, and LG Mojo. Let's see how they did. Where is LG Mojo? Find their color. So there's a color chart down here you can use, and this color chart will help for you to find your color so you can kind of follow it through. Let's see. Okay, so in this chart there, a brown. Oh yeah, so right here, of course. So there are two companies with the highest net profits, and net profits lead to high earnings per share, and net profits lead to high stock price. So it makes sense that these companies would have the high stock price. Most companies are within this 17 to $13 band here. A couple companies are lagging down here, which is probably due to poor profits and sales. Now remember, revenues don't necessarily make the highest stock price. Why? Because I'll give you an example. A $5 billion company in revenues and a $100 million company in revenues. Which would you think it would have the higher stock price? You probably say the $5 billion revenue. What if I told you the $5 billion revenue company has $20 billion in losses and the $100 million company in sales has $75 million in profits? Now its stock is more valuable. You see how it works? Profits are king. Okay, so when we look at sales, even though Delaney Inc. had the highest sales, doesn't mean they had the highest profits or the most valuable stock, because it's about profits, not sales. Although sales are needed to make profits, so you're really focusing on how to extract the most amount of profits you can from your sales. So we have a top end of 250 million in sales and a low end of 137 million in sales. So this company down here needs to really work on their forecasting. Read the forecasting module in the user guide and play some practice rounds. Most people are as do these companies here. These four companies here as well should do that. These companies in this pack here are, between 220 to 250 million. They're doing pretty good for revenues for round one. Okay, earnings per share per team. So we have the two companies that have the highest net profits also have the highest earnings per share. Why is that? Because you take your net profits, divide by outstanding shares, and you get your earnings per share. So the two ways to increase your earnings per share is to increase your net profits or decrease your amount of outstanding shares. So we have a nice bandwidth, a range of performance. So that's what's great about the simulation. It really is really does measure the little differences that decisions you make and accumulates in earnings per share, stock price, profits. So we have a number of companies that are all over the spectrum as far as earnings per share, from the top of $6.21 all the way down to 91 cents. So what decisions did this company made that lost them, over $5 per share in earnings? This needs to be investigated and looked at. And for the companies in the middle here, research these top companies. What did they do to get their profits and earnings per share so high? All right, and then this is just the total market share in units here, and total market share in dollars. Um, okay, so that's the graphical overview of round one. If we look at the scorecard here, we see that the points range from three teams like over 1,000 points to some teams that are down here below 400. Now the gross profit margin, everyone started at 40% gross profit margin if you took your gross profits divided by sales. So these companies, any companies here, these 6 companies here who have 40% or less, you've made no improvements in your profit margin percentage, so investors don't like that. And you see that some companies were able to move up through the 40s, some companies, one company in the 50s, and one actual company in the 62% of gross profit margin. And that ranks them at 98%, or they've done better for the gross profit margin in round one than 98% of the previous players, which is a pool of over 6,000 players. So congrats to that team for doing so well in round one. And if you look at stock price, I have 2 teams in the 95% level of stock price, and we have a nice range of stock price here. Return on equity measures the amount of return you get for your actual investment in the company, or the amount of equity owned by the company. Total points. Now that you'll see this total points is cumulative. So in round 1 and round 2 points will be added together, and we'll get these cumulative points will keep increasing, and that's how you're trying to get to the 20 over the 2,500 to get the A in the course. So operating profit margin, what lowers this? If you over advertise. So advertising is the one area where you aggressively advertise and lowers your operating profit margins. Your earnings per share, of course, is your net income divided by your outstanding shares. Return on assets are how efficiently you use assets. So if you're over purchasing assets and not using them very efficiently, meaning you're buying production plants you don't need, you're going to have low return on assets because it's looking at profits to assets. Net profit margin, of course, one way to control this is to manage your debt properly, not to pay too much interest. We all pay the same tax in each company. Our revenues per share, of course, are the revenues divided by outstanding shares. Total asset turnover looks at assets and sales. So, and all these ratios are detailed in the user guide. You should have gone over them in financial accounting. You should have gone over them in finance. So this should not be anything new to you, these financial ratios. Okay. So those are just the leaderboard, so you can kind of see where your company fits into the other companies. So let me go to my demo, which is like your practice game. And if you really want to get good, at the simulation, you have to play multiple practice rounds. So I'm going to reset my practice round, and I'm going to erase all my work and go back to round one. So as I'm building the car, and this is just a quick review of what you should have done in round one. As I'm building your car, I'm putting more emphasis on um, items that are important to my buyers. So if I see a high importance factor, I want to make sure that I don't disappoint too much on those factors. And when it comes to forecasting, I'm going to look at last year's forecast, and then I'm also going to pull up the student manual, and I'm going to review. It has a lot of good information in the student manual, and one area I should review is the forecasting section. So it tells me the growth rates of each car per year, and also the estimated amount of cars I would sell if all companies were equal in the demand factors of their car. So it gives me a rough estimate of what the average sales would be for the year. So if I think my cars are better than the average sales, I would forecast higher. If I think that they're not as good as the average sales, I may forecast lower. So that's just a basic rundown of how you should be forecasting. All right, so I'm just throwing in some numbers here. I'm not trying to, but I'm putting in higher prices. So I kind of expect that my sales won't be as good as the average because I'm building cars that are not always meeting all my customers' expectations. And I'm building cars that I hope will be more competitive, but I can't make a car that's going to exceed all my customers' expectations and expect to do well. And now, for some of you, you may see that, I left off the simulation with a surplus on my finance page, and then suddenly I now have a deficit. Why is that? Well, one reason could be because you over forecasted and there's some cars that you made that you didn't sell. Now, if this happens, you're not going to develop the revenues or the profits that you see in the pro forma financial statements, and you may have an unexpected deficit. So, okay, so I filled in the sales for year one. Here's the reflective observations. We're not completing these for this abbreviated summer course. So I saw a couple students actually filling those out. You don't have to fill those out because we're moving at a pretty fast pace here. Okay, so in the advertising area, they give me a range of what's expected to be spent in this year, high end and low end of the range, and they give me these categories. So again, the user manual is what details if the effectiveness of each of these categories, with television and newspapers being the most effective. And this area takes a little bit of time to fill out, so I'm going to just pause this while I fill this out and then move on to the production. Okay, I'm in the production. I see I have one plant per vehicle class, and I have 1,000 cars per capacity per plant. And I see that my forecast here is larger, so I'm going to have to buy some production plants. But I don't want to buy 5 of them or 4 of them if I only need to buy 2 additional to get me to my capacity of 3,000 to meet my production or my sales forecast. So don't over purchase production plants if you don't need them. Only buy to the capacity of what you're forecasting. And I see I have some leftover inventory from year one, so I only are going to try and build to my exact production. And the excess or shortage should be 0. Scrap factor is already built in, so I just have to build to my production. So you never want to have anything other than 0 in the excess shortage area here. So I see that if I invest in the company, I get operational cost reductions. So I'm going to invest in my company here. Just do one level of each. I'm not very strategic about it. You can be more strategic later when you do that. So let me submit my production data. So right away in my finance page, before I ask for any additional funds, let me see what my surplus or deficit is. So I have a very small surplus. I want to make sure that I don't run a deficit. So I'm going to borrow some money here. Let me borrow some money. All right. And it gives me a little bit of surplus, but you know what? I'm going to borrow a little extra money. and you'll notice that when I do borrow extra money, my interest rate goes up. So you can't borrow too much. I'm actually going to do something controversial. I'm going to retire a little stock while my stock is cheap. So I'm going to retire $2 million worth of my stock while it's $5 a share, or $21 is your estimate. So let me retire stock, and that'll help my per share variables. So I have only a $5.6 million surplus. Let's hope I don't have too many unsold vehicles, because then that will render me in a deficit. So let me process this. Excuse me. Okay, so now I'm in year 2, just like the class, but this is the practice environment. So now that you're in year 2, I'm aligned with you in course for the team competition. The first thing you should do is look over your overview points. So I see there that I did 100%, over 100% increase in revenues. The max points I can get for any category is 100. So my quick ratio, I lost points in my quick ratio because I borrowed more money. My debt ratio was actually improved. I borrowed money because I actually increased my equity. My gross profit margin improved. I earned 40 points from that. And my operational profit margin improved. And my net profit margin improved. And these are critical areas. If you keep improving your profit margins, gross, operational, net, a lot of other areas will improve. Now, my total asset turnover, I didn't do as well because I bought a lot of assets. I bought a lot of plants and operational investments. Equity multiplier is good because I did increase my return on investment, and my return on equity increased because I increased my equity. Earnings per share increased greatly, but I only got 100 points for that. And my return on assets increased because I did increase my sales greatly compared to the assets. I'm sorry, return on assets, I increased my profits in relationship to the increasing. So I increased my profits faster than my assets, so I got 62 points for that. My book value, my market capitalization went up because my stock price went up. My book value went up because I increased my equity. And I better forecasted my vehicles than the previous round. My percentages of accuracies were higher, and I earned some points in this. Now, this is going to be hard to beat next round because once I get 100% accuracy, if I get anything less, so I can never really earn more points here. If I get 100% accuracy next round, there's no points to earn. I'm just trying not to lose points moving forward once I made this. But here, I had a deficit. So I thought I was going to have a surplus, but I had a deficit. If this was a surplus, I would have had 1,100 points. But now I only have 900 points because instead of earning 100, I lost 100. So it's a 200 point swing. So how did this unexpected deficit develop? If I go to production, I had estimated and forecast too many sedans. So that and truck and luxury, but sedans really killed me and threw me into a deficit. So that was unfortunate. Now, going into round 2, I'm going to first look over my assessments, and any place where I did not perform well, there's a little help. So I performed pretty well in most areas, but my cash management, which is a deficit, I give some information here. I should have a $15 million surplus. My operational investments are low compared to where I should be. So it gives me some nice self-feedback here, which you should do. Review your round by looking at the number of stars, your score, percentile, your performance, and then maybe your suggestions to improve. Charts, I would look over my chart, specifically my performance chart. And what I want to look at here is I want to go down to the bottom, and I want to see my market potential versus sales. So I met all my market potential in these 3 vehicles, but on economy, I could have sold 54 more cars than I actually did. So that's just something to note when I'm forecasting again next round. Okay, so industry, now I could look at my competitors and say, okay, find out which team did the best, how did they manufacture their car last year, what were their statistics, their features, what were their sales price, what was their market demand, how many vehicle units did they sell, what was their gross profit, how did they overall do in their metrics. So here's where I do research on other companies, just like Ford, GM, Toyota, Chrysler, Honda would do with each other, because in the current year, they could look back to the annual reports and financial statements of these companies and say, what did they do that made them better, that had, how did they make the vehicles? They could research all the vehicle characteristics and sticker prices and try to figure out, improve their strategy to compete better. Of course, the financials are backed up, and then I started getting my sales. So now you notice that customer expectations have increased here. Your price went from $20,000 to $25,000, 20,500 is your top end sales price. You can't go over that, but you can go under it. Um, and I'm starting with my new sales forecast here. So again, as time goes by, customers expect more, and you have to build cars that are going to hopefully meet their expectations more. And the only way to stay competitive moving forward in the simulation is to get these operational cost reductions. So I made 4 levels of investments in my economy vehicle, which gives me a $1,200 cost reduction. So when I build um, something with 2,500, so to get 20 miles per gallon fuel economy, it's going to cost me $2,500 in materials on the build. I get a reduction of $1,200, so now it's only costing me $1,300, which is going to help improve my profit margin for the vehicle. But you get that. That's just I have to actually improve that. So, but this is in total. So as I build the car and put in my numbers, you'll see that my total cost of material and labor is 12,100. I get a $1,200 reduction, so it's 10,900. So that helps me stay profitable. So operational investments are a key consideration in this game. And again, marketing, production, finance, and hopefully and you'll be more competitive finishing round 2, moving into round 3. Okay, so that's my 20-minute or so review of year 1, giving you some advice and some help to improve your score and do better in year 2 and improve your competition level. So I look forward to your improvement in year 2. So please check Blackboard for the due date of the next round. Remember, we have 6 rounds that we're completing here in 6 weeks, so we have a tight schedule. I look forward to see how you perform. Thank you and take care. Also remember that you do have a case study due, and you should be finishing up your discussion board posts. Take care.